Bitcoin and the cryptocurrency market are showing the exact same signs we saw prior to the explosive 2021 parabolic phase of the bull market. Will we see a parabolic phase again? If so, how soon and what are we looking out for? In today's video, we are jumping deep into the macro charts as well as discussing the recent breakout of the 4-week-long symmetrical triangle pattern. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope everyone's having a fantastic day today. In today's video, we are diving deep into the macro and the short-term charts, discussing exactly what has happened with the price action, exactly what is happening, and exactly what you should be expecting next. We're going to be going over the key levels to pay attention to, breakout targets for the current pennant, what the bulls need to do to push the price into price discovery, and can the bears reclaim control. We'll also be discussing why Bitcoin and the cryptocurrency market are on the precipice of a potential parabolic phase and exactly what we are watching out for, reviewing historical price data and of course current momentum data. Before we do get into it, smash that like button, hit that comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information, no hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining our trading channel, we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll not only get access to our VIP group where we post all our trading setups, you'll also get access to our group chats, our general chat, our trading chart and education chat, our news, our daily video, our help, and our trade setup chat. If you're interested in getting access to all of that, go ahead and contact us in the pinned comment of the free channel for more information. You can also go ahead and click on those two links. Without further ado, guys, let's dive in. So starting on that market data, 24-hour volume is up 50%, sitting at 169 billion. With that increase in volume, we have seen an increase in liquidations of 72.18%, sitting at a total of 171 million. Of the 171 million, we have seen 54 million long liquidations and 116 short liquidations. Taking a preliminary look at the price action, we have seen Bitcoin bullish break above our downtrending diagonal resistance of the 4-week-long consolidation range. We can see we had a break and a shift on the RSI, a positive momentum shift at the same time in which we broke out of our trend line, which indicated a confirmation of that breakout, as we had again the trend, we had the structure, and we had the strength. We had 3 points of confirmation, and thus we had a valid breakout. On the short term, we as well saw Bitcoin break above our prior lower high, pushing through that 71.5k resistance up to a high point of around 72.9k. We're going to go dive deep into the price action today, discussing this in a lot of detail when we get up to our short-term analysis. But first and foremost, guys, congratulations for paying attention. We have been telling you this the entire time. We told you on this correction, that while we remain above 60,000, support is support until it's not. While we had bullish absorption appearing on the RSI, again, lower lows developing on the RSI and higher lows developing on the price action, we had a bullish trend. It signified the bulls were still in control and we were expecting a break toward the upside. And that is exactly what we have seen. In fact, if we move over back to our Telegram channel, we can show you an amazing profit over here. This is on Bitcoin. We took a long all the way down at the bottom. You can see our long entry price was $60,865, which was quite literally that exact dot at the bottom on this high low over here. We have been long since that point. So when everyone was running off the heels, we were putting our money where our mouth was. We were in those positions. So let's move over now to the broader market. So DXY has done what we expected to do as of yesterday. We told you guys we were expecting a breakdown of this uptrend first and foremost, then a break toward the upside. This was the most unlikely scenario as we had a strong multi-month level of neckline resistance in comparison to a 2-week uptrend. And thus we did expect a breakdown of the uptrend. Again, a breakdown on the uptrend. A drop in the DXY is bullish for risk assets. We are expecting this to continue now towards these monthly low points. This is monthly low at around 103. A loss of 103 would push Bitcoin even lower to retest those, the DXY lower to retest these yearly low points at around 101.5 to potentially 101. Moving over to the broader markets, the S&P 500 still not a lot of movement over here on the weekly. We did see a largish weekly candle toward the downside. Again, it did get eaten up about halfway, remaining above our short-term trigger point, which is always good to see. At the moment, like we've said, while we do remain above 5,000, this is the most important thing, while we remain above 5,000, no matter what really happens on the short term, we see these red candles, we see larger red candles, it doesn't really matter what happens, we are going to still be bullish, we are going to still expect continuations on the higher time frame. And sometimes zooming out your time horizon, particularly if you care about what happens on the macro, there's no need to really worry too much about the immediate short term. You're just going to get caught up in your emotions. It is normal for price to fluctuate. Price is going to fluctuate, as we saw in Bitcoin, as long as the fluctuations occur within a definable range, okay? And the key structural levels, in this instance 60K, is able to hold, then all price movement, or volatility, or fluctuations within this range is essentially irrelevant. So a lot of people get caught up on the short term when they're focused on the macro. The only time you need to worry about the short term too much is when we start to see, again, potential top signals, okay, for reversals, and of course, if you're trading the short term. So I wouldn't worry too much about what is happening here. Again, if we do lose 5,000, that is going to be a high time frame reversal towards our prior yearly high. Until then, we are still expecting continuations. The same goes to the Dow Jones over here, guys. It's only if we do lose this yearly level of 38,000, just a yearly base of support, will we expect a retest of the 2021 all-time high. Again, until then, any correction, whether it be large or small, is considered a healthy correction. With that being said, let's go over and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's get into the charts and discuss. So a very quick overview of what we're discussing. In today's video, we are going to be discussing in extensive detail, first and foremost, the short-term price action, what is happening, what we expect to occur next, how the bulls push price lower, higher, and what the bears need to do to bring the price back downwards. We're going to be going over the key levels and exactly what you need to be paying attention to. We're also going to be jumping over to the macro charts, discussing the weekly chart, and most importantly, discussing a particular set of indicators we are seeing on the weekly chart on the broader scale that we saw play out not once, not twice, but we are seeing play out 3 times. And in the prior 2 times we saw the exact pattern of indicators occur, it actually resulted in not only an explosive move past that all-time high, but it resulted in that parabolic phase of the bull market. We are seeing exactly almost a carbon copy of what we saw in the past occur again. And then we're going to be jumping over to the monthly chart, discussing, of course, the 4-year cycle, the bull run, projected top dates, and the momentum on the RSI. So let's go ahead and get stuck into it, starting on the short-term price action. So as you can see, Bitcoin has broken above the pennant formation. The pennant formation has been now eradicated. It is done. It is finished. We have broken above. If you recall to our video, we told you guys the measured move of the pennant was less important than the key short-term and high time frame structural levels of resistance, which again are relevant on the price action chart. So that means the most important level of resistance is still going to be this initial high at 73.8K. This is sitting around 73.8K. This is going to be our most important level of resistance. A break above this level of resistance pushes Bitcoin into price discovery. It pushes Bitcoin above the range of consolidation we have had since the start, or should I say since the end of February, and results in a continuation, an aggressive continuation in that uptrend. With that break of 73.8K, not only do we see a short-term break, but we also see weekly confirmation of continuations, and most importantly, we would likely also see, and we'll come back to this point again later in the video, a break of the 80 point on the RSI, and we'll talk about the significance of that in just a moment. For those who've been watching the channel, you would know the significance of the break of the 80 and what that would actually result in terms of price direction. So some very important levels, and the most important level of that is still going to be 73.8. So moving towards the key levels. The key levels of structural support are still valid, as we are still ranging between, again, the highs and lows of this range. Now, what has changed is we are now above a downtrending diagonal resistance, and we do have positive momentum. So the probabilities are in favor of a continuation back towards this level prior to a breakdown underneath 69K. So this is where it becomes very important to understand our key levels and why this downtrending diagonal resistance is no longer the most important thing on the chart. We are looking at our horizontal levels now, that diagonal level has broken. So the key levels we are watching, again, is going to be 69,000, remember, 69,000, 73.8, okay, and then we have over here 65, okay, 0.8, and then we have 60. Now the distance between 69 to 73.8 puts us in the short-term bullish zone. This is the short-term bullish zone. Okay, a break above 73.8 puts us into the high time frame bullish zone, or the macro continuation upwards. If we remain above 69K, the likely direction is still going to be a break above 73.8. It is only if the price action drops back below 69K, we enter that neutral range of consolidation, okay, which is going to be the distance on the weekly between the weekly all-time high, which is at 69K the prior cycle, and that same weekly candle at 65.3. So the distance between these 2 points is the exact distance between these 2 points, which is a neutral zone. So we are in this bullish territory right now in the short term. So if we want to remain bullish and continue upwards, we need to see that 69K level hold as support. If the bears want to reclaim control, the exact same validations of which we discussed prior need to take place. The price action will need to break below this higher low. It is only if this higher low breaks will the uptrend that Bitcoin is traveling within be damaged, and only then will the bears actually have enough strength to push the price back down to retest that 60K region. If 60K is broken, that is when we go lower. But like we said, while we remain above 69,000, the probabilities are still in favor of that continuation upwards. So let's now talk about the shorter time frame price action. What we have noticed and what we can see in the price action is, if we zoom back a little bit, we can see we had this horizontal consolidation range over here between that 69K level and the 71.5K level, which we eventually resulted in a breakdown and continuation from. This level is now going to be an important neckline of support. So the 71.5 to 71K range, represented by this blue horizontal zone, is going to be the local area of support. So potential price directions are going to be within and into the support before a continuation upwards. And if we do break below this level of support, that is when we could see a move to retest the downtrending diagonal resistance or potentially the 69k region. So in the short term, provided we remain above this area of support, we are expecting continuations to retest these highs. And that is simply the short term. There really isn't much more to it today, guys. That is about all the key levels you need to be paying attention to. Right now, the price action is an uptrend. We have broken a downtrend. We have flipped positive momentum. We have all the bullish signs over here. We did not reach that prior high. That is okay. We can come back down and retest the support. If we do break below this area of support, we will come back and retest our downtrending diagonal resistance. And it's only if we break back below 69k, we will then expect a retest of our range low or this uptrend once more, invalidating that breakout. As of right now, it is still looking good and we are still expecting a continuation upward. Now, there are some very important things that are coming up very soon that we do have to pay attention to, which could massively impact the price action. Remember, guys, price action is a result of buyers and sellers. Buyers and sellers make decisions based on a whole multitude of things. It could be perceived systematic risk, okay, economic news, economic data, policies, okay, governmental policies, taxation policies, societal perspectives. Some people just literally gamble. It's a whole range of reasons people make decisions. Now, one of the main drivers of price action is always going to be risk. It is always going to be interest rates, the cost of debt, and the cost of the dollar. So overall, we look at interest rates to guide the perceived systematic risk in the market, which drives investors' decisions to be more risk on and more risk off, and that massively influences the risk asset market. So we do have, of course, economic data coming up, which is relevant. We have got inflation data and we have got our interest rate data very, very soon. We have interest rate decision and we have inflation data. We can see on the 10th, which is tomorrow, we have got inflation data. Now, if inflation continues aggressively higher than expected, the probabilities of a sooner than later interest rate cut decrease. Now, if a sooner than later interest rate cut decreases in terms of probabilities, the market will likely respond more negatively and we could see the price action move slightly downwards. Now, I do say slightly because as long as the overall narrative, which has been driving the risk asset market up, remains intact, which is that interest rates will in a future period eventually be cut, as long as that narrative remains intact, the market will continue to climb. Now, if that narrative breaks or if that narrative dissolves into something bearish, which is we're not going to see interest rate cuts, or we're going to see very, very few interest rate cuts, we could see the market become more risk off and we could see, risk on, and we could see the risk asset market fall. Now, one of the main leading indicators of what interest rates are going to do is, of course, inflation. So moving into inflation data, it is quite unlikely we're going to see significant movement for Bitcoin. It is quite unlikely we are going to see breaks of 73.8 initially, or should I say prior to that inflation data, okay? As the market is still skeptical, the market is still moving cautiously into these major economic events. So definitely keep attention to that and pay attention to that. If we do see very, very bullish results in there, the market could massively go up. If we do see very bearish results, we could see some short-term volatility that could cause the price action to move in a way that was not present with the data we have in the charts right now, as the data we have is a reflection of buyers and sellers at this moment and in history. So if there's a piece of news that impacts or influences buyers and sellers' habits in that period of time moving forward, that data is not present right now and we can't assess that. So it's important to understand. Let's move over to the macro chart. So like we said, guys, we are seeing a combination of indicators that we have seen in the prior cycles play out once more. A very, very bullish combinations. And this is going to be what we saw in the prior cycles pre to the parabolic phase. Now, this isn't the bull run phase. The bull run phase isn't this. This is the parabolic phase of the bull run. In reality, the bull run mostly starts when we break above that yearly low point. So in this instance, the bull run started over here, okay? In this instance, the bull run developed and started around this point. And of course, in our current cycle, the bull run started around this point over here. So the bull run's been going for a very, very long time. But in that bull run, we've got a parabolic phase. We've got a phase where altcoins go up. We've got a phase where everything blows off top. We get this phase where everything goes crazy. Now, that parabolic phase has been again seen in prior cycles when we get a few things. From a technical perspective, we look for a monthly candle close above the prior all-time high, plus a monthly close on the 80 RSI. So there's that 80 RSI. We see those 2 points, a monthly candle close above the 80 on the RSI plus a monthly candle close above the all-time of the prior cycle results in entrance of that parabolic phase. Now, the likelihood of that occurring can be influenced by what the strength of the price action is doing. And what we can see is, according to historical data, we have got exactly the same environment of which, in terms of our technicals, we saw prior to that break and continuations that we saw in prior cycles. And that is number one, at the point of retest of the prior all-time high, we see a retest of the high long moving average of the pi cycle, this white line. We see a retest. So you can see I've actually gone ahead and put a little red circle around. I hope you can see that at the point. So we had point 1 here and retest over here. And with that, even in our first cycle over here, we also had that retest of the high long moving average as we retested that prior all-time high. That is validation number one. Now, validation number two is going to be when the red line, okay, the lower band of the pi cycle breaks into the Ichimoku cloud. We can see the break into the Ichimoku cloud, the break into the Ichimoku cloud, and we can see in the first cycle, the break into the Ichimoku cloud. With that, we have double confirmation on these indicators, and what we have seen historically, when we get that double confirmation, it eventually results in the breakout and macro continuation into that parabolic phase. So what I'm trying to say is the dominoes are lining up exactly like the dominoes lined up before for that parabolic phase. So moving over to the macro, what we can see for that macro continuation, we look for 2 points. Number one, we look for a monthly candle close above that prior all-time high. Bang, we saw it over here. Bang, we saw it over here. And we have already seen that. We've already seen the monthly candle close. But in the prior instances with that monthly candle close, we also saw, let's go ahead and draw a vertical line, a break on the RSI on the 80. We saw that bang happen a month after. Okay, 1 month after the breakout, we saw an 80 breakout. In this instance, we saw again 1 month after the breakout of the prior all-time high, we saw that RSI 80 breakout as well. So in this instance, we've seen the monthly candle close. This month, if everything goes according to what we have seen in the past, this month, we should see the break of the 80 on the RSI, and that will validate that we are entering the parabolic phase, the 2 points of validation we look for. If we move over to this chart to get a better view of the monthly, what we can see is that RSI is getting very close to the 80 point. It has actually gone from a bit of a divot into now a small little uptrend, and we do push over that 73.8k range this month. It is highly likely we break 80 and enter the parabolic phase. Moving over to altcoins, what we can see is the altcoin market. We'll go ahead and bring up the Bitcoin chart really quickly over here. We can see the altcoin market is in a very, very similar situation to what we have seen in the past in regards to where Bitcoin is at the time, okay, of when the altcoins are at. So I'll say it again because I completely butchered that. If we look historically at Bitcoin's price action, when we start to break above that prior all-time high, around this point over here, we break above that prior all-time high, okay, that is when altcoins are in this red zone. Now, the red zone is actually going to be sitting underneath the dead cat bounce high. So the all-time high, we drop down, we dead cat bounce, we create that high. That is the dead cat bounce high. We can see altcoins are sitting underneath that point in the red zone. If we zoom to the current cycle, we can see once again, as Bitcoin is breaking through that monthly high, the altcoins are sitting underneath that dead cat bounce high in that red zone. It is telling us that if Bitcoin continues upwards, we are going to see altcoins complete the same structural pattern we saw prior, which is going to be a break of that neckline resistance, a break of a monthly high, which sends altcoins into their own parabolic phase, and that is when we're going to see altcoins explode. So the whole market is actually on the precipice of a macro continuation, a parabolic phase. The dominoes are smacking into position. The only thing I can see that could potentially have stopped this is the upcoming interest rate data, the upcoming inflation data, and if all of that goes to absolute hell, then we could see the overall systematic risk in the market significantly increase, and then we could see assets drop. Now, the likelihood of that is very, very low at the moment. That notion is pure speculation because the current narrative we have is bullish. So until the current narrative shifts, it is unwise. I've been saying this, guys, this isn't new news. I've been telling you guys this. Again, I have a background in economics. I've been telling you guys this literally every single week since quite literally the bottom, when I started to notice the narrative which drives macro prices in terms of risk assets upwards start to shift bullish. We've been telling you every single week. We've explained this stuff in significant detail. This isn't stuff we just pull out of thin air. We have talked about this. I've explained this stuff on the channel many, many times. I've talked about the economics behind how risk assets move. I've talked about perceived systematic risk, how it influences risk assets. I've talked about the correlation between cryptocurrency and stocks. I've talked about all of this stuff in so much detail. It isn't rocket science. It's quite simple. There's cause and effect. There's cause and correlation. Everything is connected. If you understand what drives risk asset markets up, and you understand what drives investors to make decisions on a macro scale, you can project where the prices are going to go on the macro scale. So thank you for watching. Have a fantastic day, guys. We'll catch you in the next one tomorrow. Cheers.